Welcome to the Slop Farm. Enjoy the video.
You start by picking trusted platforms and completing KYC so you can trade legally and quickly. Once done, enable 2FA and set a withdrawal whitelist to protect funds. Make sure to transfer only a small starter amount you can afford to lose, for example $100. You should also create a separate hardware or software wallet for long-term holdings. This step prepares your cash flow, secures access, and reduces risk so you can move to markets with confidence. You now define a clear strategy. Spot for long-term, swing for short-term, or DCA to average price exposure. Once chosen, analyze chart structure and set a reasoned entry price, plus a stop loss and take profit to control losses and lock gains. Use limit orders to avoid unexpected fills. Make sure to size each trade so you risk only about 1% to 2% of your portfolio per position, and account for fees and slippage when calculating risk and expected return. You finish by establishing ongoing risk control and maintenance. Set alerts, review positions weekly, and rebalance allocations as market conditions change. If an order fails, first check your available balance, any KYC or withdrawal limits, and whether network congestion or low fee caused rejection, then retry with adjusted fees or order type. Make sure to withdraw sizable profits to cold storage and keep clear records for taxes. This completes the process and gives.
Thanks for watching. Consider subscribing if we helped you today.